Today's live video, we talked about some business deductions and really focused on 4 key areas for what those business deductions are. And then lastly, we got into some passive losses and some of the rules around that. That's mainly geared towards real estate investors. So thank you for those that were able to tune into the live video. I will show the recording here. If you like the group, make sure you like it and share it. And also, if you have any other business topics that you'd like to discuss, feel free to leave a note. So without further ado, here's the video from today. Today we will be talking about some business deductions, credits, and tax write-offs. So I'll be covering a couple of the slides here. Obviously, this will be recorded. You'll be able to view the video after this is posted. So if you're not able to join live, feel free to go circle back and watch this video. So as far as business deductions go, really wanted to hit on 4 key areas. So the first area is the startup and organizational costs. Then you've got travel and car expenses, meals and entertainment. And then lastly, we'll wrap up with some miscellaneous expenses. So these are all things that you can look to deduct from your taxes and look to work with your CPA or your accountant and figure out what some things you may be eligible for before the end of the year. If you are showing a significant profit, significant net income, maybe look to take advantage of a couple of these items. So first and foremost, if you're starting your business, so your business startup costs, a lot of these will be tax deductible. So there's certain things when starting a business, whether it's forming an LLC, those articles of incorporation, a lot of those expenses, if you're registering with a certain state. So a lot of those startup costs, you can look to roll into the business and look to start to deduct those. So as you can see, if you're doing any sort of analysis or surveys, advertisement, if you're trying to get the word out for your business when you're just getting it started, travel. So if maybe some of your customers or the business may be in a different state that you're potentially looking to buy, make sure that you're keeping track of those travel expenses because those can all be deductions for you. Salaries and fees. So for fees, one of the things to look at if you are purchasing a business or if you're starting a business and you hire any sort of accountant or attorney, make sure that one, you level set with them, that they're on the same page as you and they know that you're going to have expenses, and make sure that the timing of those expenses can be post-close. So if you're buying a business, you want to roll those accountants and attorney fees into the business so that once you buy the business, that is a business tax deduction for you, and you're not trying to pay those expenses personally out of pocket. So again, accountants, attorney fees, make sure that you're rolling those into the business, that you're paying those after the business is closed, because there will be a lot of legal and financial due diligence that goes into starting a business or purchasing a business. All right, so the next slide here, we'll talk about travel and then obviously your car and automobile. So certain travel expenses are tax deductible as long as it is ordinary and for the use of your business. So certain travel expenses, such as flying to see customers, flying to see suppliers, distributors, manufacturers, any type of that travel is business tax deductible. One thing to keep in mind, if you are maybe you're going to see a supplier in a certain part of the area that is good for vacationing. You bring your spouse along, maybe you bring one of your children along with you. When you are deducting those expenses, it would only be your flight or your hotel room stay that would be tax deductible for you. So if you're buying 2 plane tickets, one's for you, one's for your spouse, if she doesn't work in the business, then you could only deduct the cost of your flight. So as you can see on there, lodging as well. So if you're staying at a resort, a hotel, wherever that might be, the cost that you have to stay there, that is tax deductible for you. Your car. So this comes up a lot. A lot of people say they're going to put their car in the name of their business. Make sure that if you're doing that and you only have one car and you use it for both business and personal expenses, that you're keeping an accurate record of those business expenses that you're using. So if you're using the car as well for personal use, try to delineate between the mileage used in the business and then the mileage used for personal. And then, as you can see, as of 2022, they actually upped the mileage rate to about 62.5 cents per mile that you could deduct as a business expense. Other things that you can deduct for that car: if you have a car loan that's in business use, you can deduct the interest from that car loan. Also, any sort of parking fees, tolls, those types of things can all be deducted as a business expense. So keep that in mind. If you're going downtown, or in your office is downtown, or customers are downtown, and you're paying to park somewhere, make sure that you're deducting those parking expenses off of your taxes. The other thing to consider, and this is something I heard from a CPA recently, that if you establish a home office, so if you establish an office in your home, that is a business tax deduction. Typically whatever the square footage is of your home office compared to the rest of your house, that's roughly the percentage that you could deduct off of your taxes. Or you could just use kind of a flat standard rate for your home office deduction. But the reason why I bring up a home office is if you are then traveling if you're driving to see customers, if you're driving to see, again, suppliers, or you're making sales calls and you're driving there, that mileage, since you're going away from your home office, you can look to deduct that off of your business taxes. So something to keep in mind for your car. So meals and entertainment, this is another big one that oftentimes comes up. So during the years 2021 and 2022, Congress passed, as part of their COVID relief bill, one of the things that they did for business meals is they said that business meals are 100% tax deductible. So as long as you're buying those meals at a restaurant, those will be 100% tax deductible. That is a change. So in the past, it was only 50% of that meal you could be used as a tax deduction. Right now, through the end of this year, that is currently 100% of your meal could be business tax deductible. So other things, entertainment, this could include tickets to sporting events, things like golf events, taking your clients to country clubs, things like that. With the Tax Cuts and Jobs Act that was passed, the deduction for sporting events, tickets, golf, things like that, that entertainment deduction went away. So something to be aware of. If you buy tickets to a Bengals game, Reds game, that entertainment expense deduction actually went away. So there is a little bit of gray area there. If you're buying meals, that's included in that. The meals can be deducted, but just be aware of that entertainment deduction. That was a deduction that no longer is. So lastly, just some miscellaneous business deductions that you can look to use. So advertising. One of the things you may not think about for advertising is if you buy apparel. So if you're buying t-shirts, hoodies, golf shirts, hats, whatever that might be, and you're using that as advertising, you're giving those out to customers, that is a business deduction. So if you've got some extra money sitting around, you're looking to get some gear for your company, take a look at that as a miscellaneous business expense that you can look to use to deduct off of your taxes. So tax preparation fees, if the business tax return is getting done, you can look to deduct those costs of the attorney. We already mentioned it, but legal expenses as well. Supplies, materials, utilities, telephone bills, all of those things are kind of small miscellaneous business tax deductions. So, one of the things you can look at towards year end, if you need an extra monitor for your computer, keyboard, mouse, things like that can all be used as a business tax deduction. If, even recently, a new office chair, a standing desk, TVs in your office, those are all can all be used as a business tax deduction. So something to be aware of from that perspective. And lastly, what I wanted to talk with you about is some of the rules around passive activity. So this mainly applies if you are a real estate investor. So if you're a real estate investor, looking at your passive activity losses, and what you could potentially deduct for those. So if you're an investor and these are passive activities and you are not materially participating in that business, and in order to meet material participation, that means 750 hours or more throughout the year, you have to be working in that business. So if you're not meeting that material participation limit, then your passive losses can only be deducted against passive gains. So one easy way to think of that is, rental income that you're getting, you can use to offset that income with any expenses. So that may be repairs, it may be new carpet, new HVAC system, anything that comes with repairing that home, and expenses that come with that, you can use that to offset your income. However, if you are a real estate professional and you do meet that 750 hours of material participation, you can deduct up to $25,000 in passive losses off of your ordinary income. So something to be aware of if you're in the business, or if you're, like I said, mainly if you own real estate, whether it be commercial real estate, residential real estate, and you're working in that business, if you can meet that number of 750 hours, you could potentially deduct up to 25,000 of your passive losses off of your ordinary income. So something to keep in mind as you're, progressing throughout, as you're nearing the end of the year, and you are starting to look at your books and records. These are all things that you should be considering at that time and looking at, to make sure that you're taking advantage of any sort of business tax deductions that you may have towards year end. Thanks everyone for tuning in. We'll be back again next week, as we will be starting a series on buying a business. So very much looking forward to that. Leave a note, leave a comment in here if there's anything you're working on in your business, or any unique scenario that may be considered a business tax deduction or write-off, anything that you've heard of recently. Feel free to drop a note, make a comment on the video, or create your own posts within the group. So really looking for people to be collaborative and network with each other, and really help each other out when it comes to building wealth through business ownership. Thanks for tuning in. We'll be back again next week.